Hey everyone, Russ here from Tactical Mortgage Solutions. This is a quick video to say don't give up on renewals until you've completed a strategy session, or don't give up until you've done a needs analysis. These are two quick needs analysis. Every time a client comes to see me as a broker that has a renewal, I'm going to spend 20 to 30 minutes doing a quick needs analysis. Inside of TMS, we have 5 strategy sessions for each client account. When a client comes to see me, I have it all mapped out and ready to go for my conversation. So in this case here, these are 2 files that I have worked on that have both turned into refinances. We want to turn renewals into refinances. Rate is important, but if we have rate and purpose, then what will happen is we'll fund more of these. So don't give up on renewals because they're typically warm leads from past clients that often we can convert. So in this case here, I'll run through just a quick little tutorial is property value. And I'm going to let you know what I'm thinking on each one of these just to trigger some thoughts. And you should or have a good idea of what I'm thinking about as a broker. But just in here is these are 11 questions I go through and ask. First one, what's the value of your home? It's under $1 million. Okay, we could probably do insurable financing or insurable pricing. What's the current mortgage balance? 273. They have a HELOC. Potentially, looks like it's a Scotia file. And what happens here is we know we're 65%. So we qualify at this point for very good pricing, 65% LTV insured or insurable. It's with Scotiabank. Renewal date this is last year. I funded this. Scotiabank's offer them these details. They're happy. HELOC's been very helpful. So that's great. I know that they want a HELOC. But then we get down to the very important questions. Any plans to renovate? So need money for home improvements. They started saying that they need money and their HELOC is not, they don't have enough on their HELOC and that. We get down to other liabilities owing, and we have quite a few debts that need to be addressed. They are feeling a bit concerned. No, they're not. They're okay with their payments. They're all good. So in this situation here, it sums up. And the next step for me with these clients is to talk to them a bit about the planning. They've also said they're frustrated at the end of each term. They add money to their mortgage. In this case, what I did was I offered a VRM because we're in a decreasing prime market. And as the rates drop, you'll pay off your mortgage quicker with the VRM. These are all ideas that I provide to them. The rate was important, of course, but the solution was more important. One more quickly here as well is this one here was with a monoline lender. And I got to the point where I didn't think there was anything going to happen with this file. But as I go through, I'm looking at this, I'm asking questions. We have a bit of a car loan here, which, 9% on this one, but they may be able to pay it off. So no real pain I can really find. But in this case here, they had said, well, we want to help our child with school, college, university, and we only have enough in our RESPs for $40,000, and we need 70, and we don't qualify for a student loan. So in this case here, I started talking to them about a step product. So with that being said is we talked a bit about how you can segment a line of credit and you can provide your son with, for his education needs, a HELOC. And then at the end, he can convert that into a mortgage, or you can, and he can pay that off. And you can amortize over 20, 25, or 30 years. In this case here, rate, yes, was a factor, but they end up paying a higher rate to get the product. So whatever you do, make sure you screen your clients. You go through, that's our job as brokers. Go through, talk to your clients, see if there's any pain you can solve, and you will have more success with your mortgage renewals. If you have any questions, please let me know. Keep well.